Hi, all. This is Dr. Jason live from Long Island, New York, where the weather was pretty okay. It was a nice day, and the market tread water, as the title of the vlog suggests. And the thing is, if you followed my vlog yesterday, my first vlog about the markets, I showed you very clearly how on several charts there was room for the market to essentially have very small range days. That is a small distance between the low and the high, so that it would fit in the lower portion of a triangle. And that's especially obvious in the Dow Jones Industrial Averages. But the good news is there was slightly bullish signs today. The biotechs were on fire because of the Pfizer takeout of Array Pharma for a 50% premium. The pot stocks did okay, technology did okay, but it was really biotech, the story of the day. And on the weekend, I also highlighted 7 biotech names, and most of them did quite well. The star of those 7 names was athx, which went up about 10% on the day. CVM went up over 5% on the day. NBY also went up about 5% on the day. So there were several winners amongst that group. I've been talking about Voyager a lot, and that one poked its nose above 27 for the first time today. So biotech is on fire. I think out of the 7, there were 2 down and 5 up. Zynerba was up about 3%. OCUL was down about 3%, and PRVB wound up down about 3%. So without further ado, I want to follow up by showing you the charts of the Dow, the ROT, maybe the S&P, maybe the NASDAQ composite, as well as CVM and athx, the star performer of the biotechs today, one of the star performers. Let's get right to it. So we're going to share screen. As always, do your own due diligence. My opinions are strictly my own and do not constitute investment advice. And occasionally I do have some great ideas, but follow at your own risk and try to weed out the clunkers from my great ideas, because occasionally I also have clunkers. So let's get to the charts, the Dow Jones Industrial Averages. Also, if you like this vlog, please tell your friends about us. Subscribe if you haven't already, and share the link and write comments, give me a thumbs up, all these good things that you can do to show love, so to speak. Okay, so this is a chart of the Dow. This is a one-day chart that extends about a year, or at least year to date. And the interesting part is the recent little downtrend, a period that I call consolidation after a nice run-up. To me, this looks like consolidation. We're coming to the apex of a little triangle. So this pennant or flag, whatever you want to call it, I guess it's a pennant, will end tomorrow. There's not much room for it to continue. So tomorrow, it could be another day of treading water where we just get a red or green candle, doesn't much matter, that will fit between these 2 lines, between the support line, which is essentially at the 50-day moving average, and the trend line that I drew in here, going the downward descending trend line. The good news is the last 2 days, it was at the top of this trend line. And today it actually closed at the top of the descending trend line. It was a doji on a very small range day. The low was 2650 approximately, and the high 26,160. That's really nothing. It's 100 and something points, 110 points. For the Dow, that's from low to high is unusually low. So basically the markets treaded water today. I do like the fact that this tiny little doji made a new high, higher high than yesterday, and a higher low than yesterday. So it's bullish in that sense. Other than that, it's a neutral kind of a candle in general. And I would have to say neutral to slightly bullish would be my assessment. So tomorrow I expect more of the same, and the following day, Wednesday, there's absolutely no room. We have to bust out with a high volume, high range day. The volume was also descending over the last 5 trading sessions, even more. It's basically been descending since June 3rd. So we have this slightly lower volume market that's not going anywhere as we consolidate. This is a very good pattern to look at, to observe that during the consolidation period, the volume is drying up. And as soon as we break out, we hope to break out with high volume to the upside. There could be some news-driven event or not. But in any event, something's got to give here. That's why I wanted to come back one day, just one day later, to show you the ever-shrinking Dow winding into a smaller and smaller range until it must explode one way or the other. So, I mean, really, the Dow itself will tell us definitively what the direction of the markets are, probably tomorrow or Wednesday. My guess is, my gut feeling is Wednesday. So tomorrow I expect further small ranging Dow on even lower volume as most traders yawn. Let's take a look at the rut. The rut didn't have such a yawnful day like the Dow. The Dow was only up 0.1%, but the rut was up 0.7%, the best performing index. And I've been I've been expressing my point of view that the rut will be the best performing index when we regain momentum in the bull market. I also pointed out that this will straighten out. The 50 will be above the 100, will be above the 200. And it is now, but it needs to become more clear, more pronounced, and the rut has to trade above the 50 as well. So it's important that we get that breakout candle that takes us above the 50-day moving average. Actually, to be more precise, above the high of May 16th, 1567. So the breakout will be at 1568 that I feel very comfortable that we resume the bull. I'm still feeling pretty good about that, but not 100%. You can never be 100% sure of anything. The NASDAQ composite, up 0.62%, was a close second to the rut. So let's take a look at that chart. This chart shows very clearly that it was stopped cold in its tracks today by the 50-day moving average, simple moving average. So it's trading in a narrow trading range between the 50 and this line here, which is about 77.73. So the 50-day, the high of the day today was 78.65. So that really looks like the small trading range that I expect for tomorrow as well. I don't think we make the breakout move tomorrow, although we could. I think we see more of the same, a low range day, green, red, doesn't really matter. Probably touch the 50 again, maybe even touch the lower end of the range. So it doesn't really matter until the breakout day occurs. And this is the S&P. What did we look at? We didn't look at that yet. Okay, the S&P 500. This had the worst, in many ways, the worst looking candle, even though it was a doji, which shows lack of conviction by both buyers and sellers. Notice it spent the whole day trading higher, gave back to a lot, wound up closing red, but basically a doji. What kind of doji? Well, you know what kind of doji. It's a gravestone doji, one that shows particular weakness, but it isn't a very big upper shadow rather. So, and it also does not come at the very top of a long rally. So we had a gravestone doji here on June 10th, and it did not go down. It was further than the 50-day. So the 50-day proved to be support, and now it turned in a new low yesterday at 28.79. That low is a higher low than the low set on the 12th. So we have well, what do we have? We have a high, a low, and then we have another, I think this is a high. Let me just check that. 28.95 versus 28.94. So a low, a high, another low that's higher than the previous low. And now we made a new high again, probably. I don't think we're going to exceed that one tomorrow. So I think we probably trade in some very tight range tomorrow on all four indices. That's my feeling. CVM, biotech, I think will continue to do well tomorrow, especially if we have another runner, whether it be a takeout or just a runner in general. Amgen has been on a tear. We've had some really good moves by biotechs. What did we have today with CVM? We had a nice candle, a big green candle, stopped by the 50-day, which proved to be support, and didn't get up to the resistance at 640. Stopped a little below that and turned in a nice day, up 5%. I expect we make another decent day tomorrow. I do think we will try to get through the 642 level. I don't know that we succeed, but I think we'll make that attempt tomorrow. Maybe it pulls back to the 50 again. But I think we're going to trade between the 50 and the resistance at 640. So that's my theory, my hypothesis for tomorrow is that we maintain a fairly narrow trading range, similar to the candle today. Maybe we make a new higher high and a higher low than yet today's candle. But I think we don't go past the high of the day on 614, which was 643. I think 643 holds tomorrow and proves to be resistance once again. It may take a few more tries before we get through that 643. Once that happens, it's breakout time for CVM. So we're knocking on the door of a breakout. Athx. Athx had a particularly nice day after I expressed my concerns about the ATM. I'm not sure as to the reasons why it had this great day. One poster on StockTwits said that it's Russell 2000 is going to be including athx, and there was a reconstitution of it, causing shares to be bought. I don't know. But I don't care as long as it goes up. From a technician point of view, it had a great day, a big green cat body, very big body, relatively small shadows, didn't give back too much off the highs. Beautiful day, closed slightly above the resistance area at 182 would be resistance. It closed above that at 183. So it had a very nice move. And the next stop would be taking out this high of 192. If it does that, it's on to bigger and better things. So I believe we're in a breakout mode. Can we pull back? Yes. A pullback to about 177 is certainly possible tomorrow after this phenomenal day today. On that pullback, I think the very same day, namely tomorrow, if we touch this 175, 177 area, we will snap back and close higher than we closed today for a small gain. So I think we will get more of a bullish candle than not tomorrow, even if we do pull back. I think we may get a doji or something to that effect, but it'll be a bullish, more bullish than bearish candle on athx tomorrow. So I'm very optimistic. Biotechnology, I'm pretty optimistic. Very well, decent, let's say 80 percentile optimistic that we continue the bull later tomorrow or Wednesday. And that's about all I have to say. I'm expressing my enthusiasm, so to speak. So I hope I sounded enthusiastic, because I am. It's being enthusiastic that prompted me to actually come on tonight, because I haven't been posting on a daily basis. I've been posting a couple of times a week. Last week I only posted once a week for the first time, but I've been posting 2 or 3 times vlogs a week. So I don't expect a daily post at all, not yet anyway. That would be a bad weather situation. The wintertime, if I'm around the house anyway, I'd be happy to do more vlogs. But in the great weather, Dr. J wants to take full advantage of the summertime. I am retired. I don't sit and stare at the computer screen all day long. So it's on occasions when I feel I have something worthwhile saying, I come on. And I think what I have that makes tonight's vlog worthwhile is some optimism towards continuation of the bull, and a great deal of optimism that biotech will reemerge as a very, very strong sector in the second half of 2019. So please subscribe if you haven't already. Please share the link. Please write comments. Please give me a thumbs up. This has been Dr. Jason, live from Long Island, New York. I want to say shalom, au revoir, hasta luego. Ciao.